We are pleased to introduce our next panel discussion, entitled Scaling the Robotics Investment Landscape. Jafer Ahmad, Director for Future Technology Platforms at the Special Competitive Studies Project, will moderate the discussion. Please welcome our panelists. Aidan Madigan-Curtis, Partner at Eclipse Ventures. Dayna Grayson, Co-founder and General Partner at Construct Capital. And Oliver Shu, Investment Partner at Andreessen Horowitz.
Good morning, everyone. We're honored to have with us an esteemed group of venture capital investors to talk about the shape of the investment landscape for robotics. We've got Dayna Grayson, co-founder and general partner of Construct Capital, Oliver Shu, partner of the American Dynamism team at Andreessen Horowitz, and Aidan Madigan-Curtis, a partner at Eclipse Ventures, who also leads Eclipse Venture Equities program. So scaling a hardware-intensive technology like robotics requires a significant amount of capital. Today's discussion will explore how leading investors approach this challenge, the strategies they use, and the opportunities they see ahead. To kick us off, at a high level, how do each of you view the current state of the robotics industry, and what are the key factors driving investment decisions in this space today? Let's start off with Dayna.
Sure, thanks, and thanks everyone for coming today and for being here. At Construct, the way we think about it, bear with me for a brief history lesson, is if you look at the foundational industries of our economy, manufacturing, supply chain, et cetera, that would use robotics in their everyday automation tasks, they really kept up with the rest of the economy in terms of technology kind of through the computer age. The computer age was in the 70s, ended in the 90s. With the dot-com crash, it really landed with a thud. And through that time period, a lot of these industries and corporates really did invest in robotics. But really from that dot-com crash, technology and other sectors really rebounded 5 or 6 years later, but these industries did not. They really, sent jobs offshore, favored labor arbitrage as a way for cost savings versus continuing to invest in advanced robotics, leveraging things like the internet age that started then. Mobile, cloud, et cetera. And so the way we think about it is the whole robotics space, and I'm overstating here, apologies for any roboticists in the audience, especially at the large robotics companies, kind of became frozen in time, at least in the US. And so they didn't benefit from connecting to the cloud, using big data, certainly nothing with generative AI at any scale yet. That's obviously starting to happen. And so when we think about what is the future of robotics, it's about harnessing that underlying technical stack that they haven't yet.
Thanks. Oliver?
Yeah, I would echo Dayna that commercially, if you look at the history of venture-backed robotic startups over the last, call it 2 decades, the outcomes are pretty lackluster, right? And I think the big shift that started to happen in the last 2 years or so is what I would call pursuing the scaling hypothesis for robotic actions. And a lot of the newly formed companies that you see emerging in the robotics landscape right now are pursuing this idea that the same scaling laws that you observe in language models, in vision, also apply to robotic actions and to physical actions. And what the implication here is that if you the capabilities of robotic intelligence are really a function of data and compute, right? And so this is what a lot of what we've seen in the investment landscape emerge over the last 2 years with these newly formed teams that are essentially almost commercial labs, raising larger venture rounds to pursue this hypothesis, whether that's building an integrated model plus robotic application plus their own hardware, as is the case in many of the humanoid robot companies, or pursuing this the intelligence layer only, as is the case with the companies building what we call robotic foundation models. What's interesting about this shift is that unlike language and unlike vision, there's not really a concept of internet scale robotics data. You can't get robotics data. You can't just scrape the internet for physical action data. And so there's this big bottleneck around how do you get this physical action data if you want to build this kind of robotic intelligence? And I think one of the emerging areas in robotics right now is is getting that robot data supply and finding out novel mechanisms to source that data supply, whether it's through simulation, whether it's through teleoperation, whether it's through video, and so on and so forth. And there's a lot of both research and commercial efforts going on at that layer, as well as at the layer of building these broad-based models for robotic intelligence. In the humanoid category, applying those broad-based models towards your own hardware and your own applications. So I think the shift towards generality has been one of the more striking things in the robotics category from a venture perspective over the last 2 years.
Great. And Aidan?
I hope we get to debate the humanoid robots today. Also, I've never felt more short than sitting in these seats. Good morning, it's great to see you all. So, echoing some of these points, but also to really kind of emphasize it, I think it's never been a more exciting moment to be an investor in the robotics space. I think we're at a critical inflection point when you think about some of the macro points that Dayna was making. You've got millions of industrial skilled labor jobs that just cannot be filled. You've got 4 to 5 million housing units that need to be built. We've got reshoring on the manufacturing side that is in the crosshairs for our national priorities, and we do not have the base of people in our economy that can do that at a level of productivity that's going to achieve our goals. So we have to increase our automation base. At the same time, when you think about going back 20 years, and I would actually argue that there's been a lot of really exciting development. You think about like the DARPA Grand Challenge 2004. The cost of the perception and computer vision bomb on that vehicle was $3 million. That same computer vision perception bomb today costs $10,000. We've seen a 2,000-fold increase in compute capability. And to your point about the foundational models, there's so many more models being built on more accessible data today that's allowing for this incredible basis of more innovation in the robotics space and much more capable and sophisticated robotics. So I think it's really laid the foundation and the groundwork for an extremely exciting time as an investor.
Awesome, that's great. Let's dive into some more details on what excites you each about the space. So Dayna, starting with you, Construct Capital invests heavily in logistics and transportation. How do you see robotics and AI transforming these sectors specifically, and what innovations in those sectors are you particularly excited about?
Well, generally, I think we have sort of a religious belief that venture capitalists the value in generative AI, at least where venture capitalists can play, will accrue to the application layer. Yes, you do need the foundation models, et cetera, and harnessing the data that's out there. But if you look at the big companies, the big tech companies, they're investing $20 billion and upwards each into these core platforms. So when we think about where we can really move the needle in terms of adding value to these sectors in particular, it is at the application layer. I would take a broader stance that across any sector, it's really at the application layer in terms of de novo tech. If you want to invest in core foundation models, go buy public equities, literally. So when you look at transportation, logistics, et cetera, a lot of the point solutions could become actually big companies by just providing immediate value. These spaces in the more hard tech physical world move incredibly slowly. Just the iteration cycles on product development, testing, and learning are much more slow than if you look at just bits and bytes of internet and B2B applications in general. You add to that the additional challenge of getting the data so that you can actually train and provide immediate value to that specific corporate environment. And again, it's even more complicated. So we like companies that get in with a wedge of, maybe it's an immediate value. It has immediate value for ROI that a site leader or a project leader could understand. But then they have a bigger application that can spread and go broad inside a corporate. So if it's logistics, maybe it's a picking and packing robot. We're not doing a lot there, but that might be one example. We have a food automation company, for example, that has a very advanced sort of AI layer for understanding how to handle upwards of hundreds of ingredients. That's a very, very hard problem to solve. It sounds very, very simple. It's actually quite difficult. And then the software platform that they are building beneath that is really the thing that's extensible across many, many different industries, whether today it's food manufacturing, eventually it could be quick serve, contained robots, And so that's kind of how we think about it.
Great, thanks. Oliver, A16Z is known for making bold bets in transformative technologies. What excites you most about the robotic space right now? You had mentioned generality, the move towards that. If there's anything else, that'd be great to hear about too. And how are you positioning your investments to capture that growth?
Yeah, so I think the most exciting thing around that I'm personally excited about is the emergence of a robotics ecosystem and a more horizontal platform to support that ecosystem. And to be clear, these kind of scaling hypotheses that I talked about are hypotheses, right? We don't actually know if the same scaling laws hold for physical actions yet. That being said, there are plenty of people far smarter than myself that are well armed with capital, and they're going to go find out. And I think if they are successful in this endeavor, it's a big part of enabling what I've been calling a robotics platform. And historically, a lot of how robotics applications companies were built is that you would build, you would take some combination of off-the-shelf and custom components, and you would put together a solution. You would collect your own data for your application. You would either use a system integrator or act as your own system integrator to the end customer. And this is like a pretty narrowly tailored set of tasks and environments that your application is suited to. This is in my view, a pretty inefficient way of building technology companies. And I think if you look at other cycles of computing, whether that's web or mobile or cloud, you always have something of like an applications infrastructure cycle where applications beget infrastructure, beget applications, and so on and so forth. I think this hasn't happened in robotics for a whole host of reasons, but I think the exciting thing now is that you have people working on tackling different parts of that robotic stack, whether it's the broad base models, and working towards some semblance of generality. But to Dayna's point, there are a lot of applications that are focused on very specialized environments or very specialized tasks that have their own unique parameters. And that data is incredibly valuable for building these applications, building on top of this platform. And there's other components to this platform too, right? Chiefly among them, I think, the opportunity for new hardware OEMs to emerge, the opportunity for developer platforms for things like simulation and building these robotics applications. I think in general, the thing that I'm most excited about in the robotics ecosystem is for these tools that make it more accessible for people to build robotics applications, because allowing it to become more accessible and lowering the upfront cost of deploying a robot into production, I think will be a huge boon to the number of robotics companies out there, but also just the time it takes to deploy a production-ready robot, right? You can get something up and running much quicker. You can you don't start from zero every time you want to build a new robotic application for a new environment, a new task, or a new embodiment. And so I think finally moving towards this applications infrastructure cycle, much like every or almost every previous arc of computing, I think this is the really exciting opportunity here.
Super exciting. Aidan, Eclipse Ventures has a strong focus on industrial transformation, industrial evolution, as you call it. How do you view robotics as a critical component in reshaping traditional industries, and where do you see the most potential for disruption?
Yeah, we are kids in a candy shop right now, to my earlier point. Let me just sort of shotgun across a couple of different industries of interest where we invest. So construction. 50% of the cost of construction is labor. That is a number that is astronomically higher than most industries. Over time, over decades, you've seen the labor component of any given industry come down to 10 or 15%. There's so much that can be done via automation in construction. We've recently made a bet in a company called Reframe. It's a modular approach to construction. That's not new, but this is a microfactory approach from one of the earliest people at Kiva, ran Amazon Robotics for a period of years, and really understands how to take some of these lower cost pieces of infrastructure, bring them to construction, and make a huge dent in the space. Speaking of Kiva, only something like 20% of distribution centers in the country have any form of robotics or automation whatsoever. You want to see a great company in the distribution robotics space, you can talk to Chris Walty at Mitra over there, but there's a ton of opportunity to actually really drive high value and high ROI, especially in the rapidly moving world of e-commerce, where understanding exactly what's going out the door at as fast a pace as possible is critical in today's infrastructure and ecosystem. We need more robotics in distribution. you've got something like several hundred gigawatts worth of renewable energy projects that need to come online in order to satisfy the hungry hippo of data centers that's coming up to feed our AI future. We don't have the ability to go build those projects. There's some interconnect problems, but even just getting the infrastructure in place. There's a company not in our portfolio called Built that is out there actually trying to bring better robotics, better automation into building renewable infrastructure. So really, wherever you look across the industrial sectors, whether it's energy, manufacturing, construction, transportation, don't get me started on transportation automation, that one's been really interesting, right? There are tons of opportunities and winners who are gonna take the game.
Great, that's helpful. I want to add a global lens to the conversation, given that all of you focus on investing in companies that support the US economy and national interest. So Oliver, I'll start with you. With global competition in robotics heating up, what unique advantages do you think the US has in fostering robotics innovation? And how can investors help ensure that America continues to lead in this critical sector? Also wondering, have there been any models elsewhere in the world that have shaped your perspective?
I think where the US leads is in, and probably will continue to be in, the intelligence layer of robotics and kind of figuring out also, and experimenting with all these different methods to build more robust and more broadly generalizable robotic intelligence. I think in many ways this parallels the dynamic you see in other modalities of AI, whether that's language or vision models or video or so on and so forth. I think the two areas we need to get a lot better at are in hardware and scaling data. And these two things are really related. On hardware, I think there's lots of examples in the US of really advanced novel hardware design. But I think the key thing here is around the move to manufacturability for advanced robotic systems. And I keep using this phrase platform to describe the shift in robotics. And I think, imagine a mobile platform without the iPhone, right? Like you need the hardware that supports that platform, and the hardware is like a critical piece of the platform. So I think the opportunity for mass manufacturing focused American hardware OEMs is certainly there, and it's actually like a critically needed piece of the platform. And then the related piece about this is scaling data and data capture, because you'll notice I talked a lot about kind of this idea that you need to get a large volume of robotics data that today just doesn't exist, and or at least is not readily accessible. And this is related to robot adoption. So I think improving robot adoption and to Dayna's point, deploying more robotics applications across industries, across a diverse array of environments and tasks. This is and making sure to capture that data back, which is related to kind of the hardware systems that we're using. Getting both those things right as a country, I think, is two of the areas that we can improve on to really make the American robotics ecosystem much more robust.
Great, that's helpful. Dayna and Aidan, as robotics becomes a global industry, what regional markets or trends are you watching closely when making investment decisions? And how are international markets shaping your robotics investment strategy? Start with Dayna.
Sure. We look at it through like this lens of, and bear with me on it, sort of a cost per kilogram of production. And you think about iPhone, very lightweight, very intricate, high cost of production, i.e. very difficult and costly to automate. You look at cars, on the other hand, big, heavy machinery, big, car doors going on, very low cost of production per kilogram, like $2. Those are the areas that, and then you look at sort of the US and, car manufacturing can be done in the US. You can automate. It's where robotics, for example, have gotten the biggest stronghold in production in the US. So while it's nice to look at, regional development or just robotics as a whole as a category, each one of these end markets are massive. Like in the B2B SaaS world, we would never lump, media in with finance. But yet in the robotics world, we're lumping cars in with food, right? These are big, big markets. So we try to take a different lens on it, and we look at that like cost of production per kilogram. and therefore look at, okay, what are the things that can actually be done and make sense to be done in the US? Not all of them will. Like, globalization's not ending. You're not going to get phone manufacturing, for example, in the US. But it does make sense to do certain things for a number of reasons, because it is cost effective. That is the bottom line. And you can innovate in the US with technologists and the entrepreneurs, et cetera, that we have here can really make a huge difference. So regionally, we are very focused on the US, for example, but we look at it through that lens.
Thanks.
Yeah, we invest in North America, Europe, and Israel, but what I did want to say about the global robotics impact is China's kicking our ass. So it's bad. Last year, China deployed more robots in industrial spaces than the rest of the world combined. We have 141 robots deployed here in the US per 10,000 workers. That's a fraction of the number that we see in China. Now, this is a Robotics plus AI Summit, not a defense tech summit, so I'll leave my commentary at that. But when we think about global competitiveness, the ability to rapidly manufacture, leveraging the high productivity of automation is critical, and we are really behind.
True, good point. So I want to talk now about the future of robotics and scaling. I know we kind of touched up on some of this before, but Oliver, you've written a bit about embodied AI and robotics as AI continues to advance. How do you see it reshaping the robotics industry? Are there particular areas within AI-driven robotics that you believe have the greatest potential for investment?
Yeah, so I think a lot of the work in robotics right now is inseparable from AI. Like, I almost wouldn't call them like two different areas of work at all. And I think the work in embodied AI towards building these kind of embodied AI agents, otherwise known as robots, although not limited to robots, there can be other kinds of embodied AI agents, I'm sure. All of the work in robotics right now that is really at the forefront is very closely linked to AI. And I think the real unlock here is towards what I was saying earlier. If you look at the parallels with language or with vision, being able to do that with physical actions means that it is much more easy to deploy an application. The same way you have AI support bots now that are using language models as kind of the base model. A world where you can deploy a robotic application to do a physical task with a lot of the upfront base work around navigating an environment or recognizing certain objects. Like with that work done ahead of time, I think that's the real exciting opportunity of like shortening the lead time and the lift of building a new robotics application, right? I think this is the real unlock. And I think you're not going to have a world where, I actually don't think, people use the term ChatGPT for robotics a lot as like a moment where you have this like big productization unlock. And I think the issue with that in the physical world is that the physical world is so diverse that the idea of a single product solving everything is actually, in my view, pretty unlikely. And so I think it's an ecosystem that actually looks much more like Android than like an iPhone moment or a single productization moment, where you have all sorts of different applications of embodied AI that evolve and build on each other, and then you have these developer tools and developer platforms that are supporting the folks building those applications. And when you build an application in something like food handling that Dayna talked about, right? Like, food handling is actually a very specific task because it involves manipulating a non-rigid object, right? And it involves all sorts of actions that are not very standard when you compare it to like warehouse robotics. There's all sorts of data to be captured there that, when combined with some of the work that's happening at the more foundational level with AI and robotics, can enable someone to build a food manipulation robot much quicker and kind of like ride all of the gains in the space at large, right? And so I think this is the real promise here, where you have people building on common infrastructure for AI-enabled robots.
Great, thanks. Dayna, what are the biggest challenges you see in helping robotics companies move from prototype to commercial product? Is it data? Is it funding, talent, other? And how does Construct support startups in this critical phase?
It is probably capital efficiency. We have just trained our venture markets over the past 25 years to like quick metrics. Invest in software, get some ARR, watch the SaaS metrics grow, invest behind that. It's become a very metrics-based business. When venture capital used to be a idea, market impact, quality of entrepreneur business. So in robotics, I think there's often a CapEx, layer to it. That said, I think it is also really hard and sometimes unnecessary to build exquisite, like brand new de novo hardware. There are a lot of commoditized off-the-shelf parts that you can assemble. Humanoid robotics, for example, we haven't gotten back to that topic. That would be fun. You can just put these things together very, very quickly. So it is still hardware. It takes time. You're not going to get SaaS-like metrics within a month of launching a product, or even, you're not going to get a product launched within a couple of months. It takes time to assemble, iterate, et cetera, but you don't have to design brand new systems. Things are out there to be pulled together. So I think that's one of the early challenges. I think there are later challenges for big hardware companies more broadly, including robotics, and that is figuring out how they should finance additional CapEx build out over time. I would argue once you get to a certain scale, equity is probably not the best way. It's very expensive to finance some of that build out, and that there will be a combination of debt. There's a hole right now in the debt markets for, usually venture debt is the only thing that fills that space, and that's not what these companies need. They need capital equipment financing. So hopefully that gives you some sense.
That's helpful. Aidan, you've had hands-on experience scaling companies from ideation on day zero to massive global operations. When working with founders, what do you think are the most overlooked aspects of scaling their companies, robotics companies?
I just want to plus one to Dayna's point about the need for capital for scale. It's one of the biggest gaps that we see in the market right now. It's different actually because oftentimes the type of equipment that you're financing, it's not your standard equipment that can be sold again if something doesn't work out. It's like a novel laser-based approach to 3D metal manufacturing, right? Or something manufacturing for satellites that are meant to go do something completely different in orbit than ever before. So it's a little bit difficult to actually get that kind of risk capital to scale when you're dealing with product output that is not necessarily guaranteed over time. But what I would say about one of the things that's been trickiest to navigate in terms of companies scaling effectively, it's actually in a lot of robotics applications, you have human in the loop for one reason or another. And exactly when to try and hit the gas when you have a human in the loop for some part of your operations versus how far down the complete autonomy path do you need to go is this very delicate balance. And I don't have a perfect answer, but I will say, especially in today's market and probably for the next few years, getting to some demonstrable value driven to a customer is probably worth scaling your operation with a bit more hands-on humans than is comfortable, as long as you have a crisp and clear path from a technology perspective to how that feels back. And so maybe that speaks to some of the roboticists in the audience who are struggling with that, but it's a bit of a nuanced point that every single one of my robotics companies has had to navigate, and it's not something that gets talked about very often.
Thanks, that's really helpful. If we could do one quick lightning question, if you're able to answer it like this. So it seems like capital is an issue, right? Traditional VC might not be enough to push these companies over the valley of death. What other parts of the capital stack are needed? And if is there some big policy move that you think could help? Start with Dayna.
Yeah, I think, it'd be great to bring down interest rates so the debt is viable. How about that big policy? No, I think I sort of answered it in the last question accidentally, but really making that bridge between, early scale to scaling up more tenable for entrepreneurs so they don't have to keep raising very, very expensive swaths of equity?
I think the headline answer for me is I don't know, because for a lot of the stuff that is at the more robotic intelligence layer, we actually don't know how much capital some of these current methods will take, because they're kind of leaping into the unknown here around what is the point at which you start to see the kinds of capabilities that generalize and you start to see these scaling laws hold, right? That being said, I think for more capital-intensive efforts in robotics, one of the dynamics we see is that the potential customers of these companies, for example, large automakers, often will participate in some of the financings for the actual R&D and the product development earlier on in the company's life cycle.
It's hard because you can't get an off-taker to agree to do scale risk capital until they see a demonstrated ability to scale, and this is the capital that's required to scale. So you do end up in this catch-22. Yeah, we're in Washington. My call to action is, so LPO, bless it, doesn't really work for companies that we're talking about that are at that cruxy moment of, can I take my advanced prototype and actually build out a whole manufacturing site, because LPO requires, a very large and skilled company that's going to get money from DOE. So I think what DARPA is doing is interesting. If we can get more non-dilutive grant funding, it's tough. You have to be very careful with taxpayer dollars. You don't want them to be spent in irresponsible ways. But, partner with some of the larger firms that are out there doing their best to make good decisions, and probably have some underwriting criteria. It's not like we've never done this before. And let's get some capital out there for companies that are at the crux of these national priorities we've talked about.
Awesome. Thank you so much. This has been a really interesting conversation. Please join me in thanking our panelists.